Did you know that during the 2008 global financial crisis, the Nigerian Stock Exchange All-Share Index plummeted from a peak of over 65,000 points in March 2008 to around 31,000 points by December 2008? Or consider this: how does a war in Ukraine influence the price of bread in Lagos or your shares in Dangote flour mills? The connections might surprise you. We live in an intricately connected world. Decisions made in Washington, conflicts in Eastern Europe, or policy shifts in Beijing can send shockwaves through Nigeria's economy, directly impacting your investments. Understanding this global-local nexus is vital for any investor aiming to safeguard and grow their portfolio. For instance, the NGX All-Share Index, which reflects the performance of all listed equities on the Nigerian exchange, is not insulated from global dynamics. Investing presents its own set of challenges, and Nigeria is not exempted from this. Add to that the unpredictability of global events, pandemics, geopolitical tensions, fluctuating oil prices, and the complexity multiplies. Consider this oil price volatility. As a major oil exporter, Nigeria's revenue is heavily tied to global oil prices. A dip due to geopolitical tensions can lead to budget deficits and affect public spending. Foreign investment flows. Changes in US interest rates can make emerging markets like Nigeria more or less attractive to foreign investors, influencing capital inflows and the strength of the naira. This interconnectedness means that events thousands of miles away can have immediate and profound effects on your local investments. Let's delve into some concrete examples. First, the 2008 global financial crisis, originating from the collapse of major financial institutions in the United States. This crisis led to a significant withdrawal of foreign investments from emerging markets. Nigeria felt the impact acutely, with the NGX ASI dropping from over 65,000 points in early 2008 to approximately 31,000 by year end, a decline of more than 50%. Next, we have the COVID-19 pandemic from 2020 to 2022. The pandemic disrupted global supply chains and led to a sharp decline in oil demand. Nigeria's economy, heavily reliant on oil exports, faced severe challenges. However, the stock market showed resilience. By December 2022, the NGX ASI had appreciated by 19.98% year to date, closing at 51,251.06 points. Lastly, the Russia-Ukraine war from 2022 to 2023. The conflict led to global energy supply disruptions and increased commodity prices. Nigeria, as an importer of certain grains, experienced rising food prices. Yet the stock market responded positively, with the NGX ASI reaching a 15-year high of 66,490.34 points in August 2023. Let's examine a specific case: the relationship between United States interest rates and the naira. In recent years, as the US Federal Reserve adjusted its interest rates to combat domestic inflation, there were ripple effects globally. Higher US rates often lead to capital flowing out of emerging markets like Nigeria, seeking safer and higher returns in US assets. This capital flight can result in depreciation of the naira. Increased demand for the US dollar weakens the naira. Inflationary pressures. A weaker naira makes imports more expensive, contributing to inflation. Stock market volatility. Reduced foreign investment can lead to decreased liquidity in the stock market. For instance, during periods of rising US interest rates, the NGX ASI has experienced fluctuations, reflecting the sensitivity of the market to global financial dynamics. So, what can you, as a Nigerian investor, glean from these insights? Stay informed. Regularly monitor global events and understand their potential impact on the Nigerian economy and your investments. Diversify your portfolio. Don't put all your eggs in one basket. Consider a mix of asset classes and sectors to mitigate risks. Hedge against currency risks. Explore investment options that can provide a buffer against Naira depreciation, such as dollar-denominated assets. Engage with financial advisors. Seek professional guidance to navigate the complexities of investing in a globally connected market. By proactively understanding and responding to global influences, you position yourself to make informed decisions that safeguard and potentially enhance your investment returns. How have global events influenced your investment journey? Share your experiences and insights in the comments below. We'd love to hear from you. If you found this discussion enlightening, check out our video on strategies for building a resilient investment portfolio in Africa for more in-depth analysis and tips. Remember to like, share, and subscribe to Maloney Street Re for more content dedicated to empowering African investors in a globally connected world.